Every week, Yahoo Finance brings you conversations and valuable insight from C-suite executives. From current challenges to future opportunities, Yahoo Finance explores it all. Here's a look at some of this week's top interviews.
Lyft entering the European market, buying taxi app FREENOW in a $200 million deal. The acquisition will allow Lyft to expand in more than 150 cities across 9 countries. Joining us now to discuss the news, David Risher. He is Lyft's CEO. David, thank you so much for coming in studio with us this morning. We appreciate it. Talk to me about this move. Why does this make sense now? I know you've been focused a little bit more domestically as of late.
Well, so that's it. So for the last couple of years, we've been very focused domestically, and we now have better service than we've ever had before. We pick people up faster than ever. We're profitable, we're generating cash, and so now's the time for us to go big and go global. We're actually doubling our market size, the addressable market, by going to Europe with FREENOW.
It's interesting that this is the moment to go global when we are in the middle of perhaps you could call it a global trade war with the United States and several other countries. How are you thinking about the impact of that as you think to expand? Are you going to use Lyft branding in Europe? Are you going to stick with FREENOW? And how do you think about kind of the American image on a global stage right now?
Right. I mean, look, we're thinking long term, and I'm still, I'm betting on America long term, no question. Short term, we'll definitely be operating as 2 different brands. Nothing is going to change for riders or drivers. But FREENOW is a great product. It's actually a taxi-first product, which if you're in the U.S., you might think taxis and you have a certain sort of impression here in New York City. But globally, taxis are an incredibly important business. Think of black cabs in London. Think of a Mercedes in Germany taking you to the airport. That's kind of what we're trying to kind of connect with.
Speaking of airports, I do want to get a sense of what you're seeing on the consumer side of things. Have you seen any slowdown in airport travel?
Not significant. We look pretty closely at these things, and it is true, maybe a tiny bit of softness on the airport side, but that's frankly made up for by a little bit of strength actually on people just kind of going out during the week. So nothing significant for us. Lyft is we do about 2 million rides a day, and drivers make, billions of dollars a year on it. It's really part of people's daily lives, not a discretionary thing that you might cut back on.
Okay, so talk to me about that. Where are you seeing evidence that this is part of someone's daily life, that it sounds like you're describing it as a recession-proof necessity versus something that people can scale back?
I think so. Look, people, again, it's just better to be driven around by somebody else, right? Think of it. You're in the back seat, you can text, you can take a nap, you can talk to the driver if you want to. So, and for a lot of people, rather than, parking and so on and so forth, it's just a better way to get around. So what we've seen is, and this, quarter after quarter, growth. We have more drivers on the platform than ever. We have more active riders on the platform than ever. So I don't know, recession-proof is a dangerous thing to say, you never know. But I would say we're, as I say, pretty baked into people's lives.
And talk to me about how you prevent folks in bigger cities that do have access to things like public transportation from utilizing that a little bit more. Obviously, I'm having my East Coast bias right now being based in New York City, but I have a lot of people in my life who've said, okay, we're worried about a recession. We're taking the subway even on a Saturday night.
Right. Well, I tell you what, so we operate bike systems across the United States as well, and it's interesting. We've actually seen some record highs in places like San Francisco, where the weather's a little nicer. Even here in New York, a couple weeks ago, there's a crazy warm day. So, maybe what we'll find is more people are biking and fewer people are taking rideshare. But again, it's the sort of thing that I think for most people, how they get around, going to the doctor, going to the dentist, going for a job interview, it's a pretty basic part of people's lives.
Another element of business news that I want to talk to you about is what we're seeing in terms of activist investors taking a stake in Lyft and looking to have those additional board seats. Talk to me about how you're thinking about interacting with those activist investors.
Sure. So we interact with investors all the time, of course, and take shareholder concerns super seriously. We've been in dialogue with these guys for a little bit, but I think really, we tend to look sort of long term and notice, again, we're profitable now. We're generating, $700 million of cash. Never been stronger financially, so we feel really good about our position. But there's a whole process to deal with the activists.
Are there, and I should mention Engine Capital as well. Are there any concerns that they've brought up that you feel are valid concerns, that are things that you're also worried about in terms of the company moving forward?
The types of things they're bringing up are things like, gosh, we'd like to see you, global. Gosh, here we are. We'd like to see you return capital to shareholders. Well, good news, we announced a $500 million share buyback at the end of last quarter. So I think we're actually pretty well aligned with the sorts of things that all of our shareholders are bringing up.
And to that end, I know you have cash on the balance sheet, obviously, to utilize for things like acquisitions. How are you thinking about pricing power in this moment where consumers may be a little bit more pressured? Are you thinking about doing anything to make rides a little bit cheaper? I know that's kind of been your competitive advantage already, but how do you think about that moving forward?
Yeah, so our pricing strategy is to be competitive and reliable. people really don't like all the surge pricing and stuff like that. And so we took out something like $40 million of surge pricing last year, sort of just to really make sure that prices are stable. In terms of the competitive dynamic, as I say, we tend to be competitive on price. We hope we're a little bit cheaper over time. We definitely hope we pick you up faster than the other guys, and we do, about 40 seconds faster than they do. But right now, I think we're actually priced pretty well.
There's another competitor in the room, Waymo, which, according to some reports, is a little bit cheaper in certain cities here. Bank of America did downgrade Lyft on Waymo's expansion. What is your pitch to consumers about going with Lyft versus an autonomous vehicle?
Well, I mean, so Lyft does maybe 2 million rides a day. Other companies like Waymo, which is a self-driving company, great company, but it's very, very small compared to that. So my big pitch is basically like, look, we're a great service. We'll pick you up fast. If you want to talk to the driver, if you want help with your luggage, if you want, the safety and sort of security that having somebody else in the car gives you, great. But self-driving is great as well. Are you concerned about Waymo taking market share? No. And I say that because they, look, all the self-driving companies have the same issue, which is that it's a very expensive technology. And so over time, what they're going to want to do is partner with organizations like ours. We have a partnership with May Mobility, for example, that launches in Atlanta later this year. We'll have other announcements coming over time, of course. So, look, there'll be competitive skirmishes for sure in different parts of the country maybe. But I think broadly speaking, what we've seen with self-driving cars is they actually expand the market. People come and say, this is a cool new product. I want to give it a try. Getting used to kind of that ride share capability if they haven't been exposed to it previously. I do want to end on a wonky part of the market that we've been really focused on, which is the currency headwinds that we're facing. We're seeing declines in the US dollar. Now that you are expanding internationally, how are you thinking about that? Is that a concern to you? I mean, again, long term, I think, I've got a lot of faith in the US and the US currency. FREENOW is a great company, but it's about $1 billion in bookings compared to our $16 billion in bookings. So in terms of actual exposure, it's quite small. And maybe it's not such a bad thing to be sort of, get a broader, basket of currencies. But again, I'm long US. Long US. All right. Very good to hear as a US-based CEO. Real quick, I hear a rumor that you get around the city on the city bike. I do. Here. Is that true? In fact, I biked here this morning. Wow. Yeah. You couldn't tell by the crisp white shirt. I'm jealous that you're able to do the biking. I don't have that capability. You'll have to give me some of your tips and tricks, David. I'll do it next time. It's great to talk to you, Madison. Great to speak with you. Thank you for coming in the studio. Really appreciate it.
President Trump weighing a possible delay to auto tariffs. But as of now, there is a 25% tariff on all imported cars, with a 25% tariff expected to take effect no later than May 3rd on car parts. Let's go now live to the New York International Auto Show, where senior autos reporter Pras Subramanian standing by with Hyundai Motor America COO Claudia Marquez. Pras, take it away.
Yeah, Brett, thanks for that. Yeah, that's the word of the day, right? Tariffs at the auto show everywhere we go, but also new cars here at the New York Auto Show. Claudia, thank you for joining us. Really appreciate it. So before we get into the new Palisade, which is right behind us, Brad talking about tariffs, sort of what everyone's talking about these days, with President Trump sort of focus on the auto industry. What's sort of Hyundai's position on that right now from where you're seated?
Of course, our position will always be we have to take care about our customers. It's a tough situation, yes, because there is a lot of uncertainty. But first of all, I want to share, and I'm sure that you know, but obviously for the audience, Hyundai has been in the U.S. for the past 40 years. We have a strong representation in the U.S. We have a factory in Alabama, and just recently, 2 weeks ago, we opened our new Meta plant in Savannah, Georgia, where we produce our EVs, Ioniq 5 and Ioniq 9. Just to give you perspective on that, 2024, we sold 836,000 units, and about 40% of the vehicles were produced in the U.S. So we are very confident on the market. Of course, the U.S. is very important for us. We're fully committed to localization. We understand, of course, the need for investment in the U.S., and we are playing a part of that. Now, when it comes to the customers, which again is tough, and even for us, just for planning purposes, what we wanted to make sure is that we have a plan for our customers. So we launched our Hyundai Assurance Program, which is confirming and assuring to the customers that MSRPs are not going to go up, in this at least this couple of months. So we are very good in uncertainty. We call it the Hyundai Speed. then we're doing and we're very prepared to deal with this reality, and again, always committed to the U.S.
Right, so it's a day-by-day, month-by-month plan.
Sometimes hour by hour.
Hour by hour,
Yes.
and you're planning to right now, protect your consumers. So I think looking more long-term, part of the Hyundai toolkit, I believe, is investing in America with the Meta plant building here. Is that sort of the toolkit you guys have? Is that sort of what you guys have been leaning into, even though that's years, it's billions of dollars of investment?
Hey, I mean, we're talking about tariffs, and all of this started in the beginning of 2025. I just want to share as well that it's not only that we have been with a factory here, but in 2019, the company confirmed an investment over $12 billion, which is a part of the Savannah plant that we just inaugurated a couple of weeks ago. I mean, really building a factory takes at best 3 years. Hyundai did that in a little bit shorter term. But that's all in all to say that, I mean, it's not about tariffs, why Hyundai Motor Group is investing in the US. The US is a very important market, it's the most important market, and we are here to stay for the long run and to invest in the US.
So speaking of that U.S. market, the SUVs kind of run the roost here, and the Palisade behind us is the newest one from Hyundai. Talk to us about what changes were made to this new vehicle in response to the U.S. market.
Today we just left the press conference revealing the new Palisades, which I'm extremely happy and proud about. So the 2026 Palisades is our second generation. One of the things I am happier on many others is that for the first time we're going to have a hybrid also as powertrain. The current generation was only available on ICE. Aside of that, of course, you can see a very bold, attractive, great design. We also are introducing with a different design Palisades XRT Pro, which also was presented in here. Safety, which is extremely important for the company, always under the promise of our brand promise, is amazing.
Right.
So design, safety, technology,
hybrid,
powertrain, exactly.
So I know hybrids are, we get that a lot of interest there at Yahoo Finance, people talk about that, but also EVs, the Ioniqs at Hyundai have been doing quite well here, right? In particular, the Ioniq 5 has been a hot seller. What's the game plan there for EVs? We have the hybrid game plan here with the Palisade.
Yeah.
What's next for EVs, and how do you accentuate what you already have with the product?
Hyundai will and continues really in a long term the EV strategy. Again, Ioniq 5, Ioniq 9 being produced in the US. What is going on today, of course, is in a little bit slower adoption for some of the customers. What we're doing, of course, is offering hybrid, as we were talking, which is like the short term until customers are actually convinced. But just to give you statistics on this March, for example, which was our last month, the last month we closed, we had our best ever March and the second best ever month since the launch of Hyundai in the US. And out of that, 72% of the volume in March were hybrids, and year on year, and 38% were EVs. So we're here to stay with EVs, and extremely happy about performance, design, availability. Ioniq 9 is going to be launched soon enough. Coming back to Palisades, we're going to launch in summer the ICE version, in fall the hybrid version. So many positive news in front of us.
So building in the U.S., electrified powertrains, new products, and price protecting customers for now.
That's
Claudia
right.
Marquez, COO, Hyundai USA. Thank you so much. Really appreciate it.
Thank you so much for inviting me.
Of course, thank you so much. And back over to you, Brad.
Thanks so much, Pras. Appreciate that. We'll have more from Pras at the New York Auto Show.
Lots going on here from both an EV and also an ICE or gas-powered car situation here. Joining me now, Steve Center, COO of Kia America. Thanks again for joining us.
My pleasure.
I really appreciate it. Before we get into these exciting vehicles, one right behind us, I got to talk to you about topic of the day here is tariffs. Last time we spoke, we talked about it briefly, but we didn't talk about it post Trump's 25% sector tariffs, right? So what's sort of your response now? We said last time, you said, we're not going to follow business rules, right? So what does that mean?
Oh, this is very complicated, and the impact of this is very unclear. Although I can say a couple of things. It affects the whole industry, affects every automaker differently, depending on where your parts came from now, the metal in the parts comes from, the car's finally assembled. So every segment isn't impacted the same way. So for instance, our K4 is assembled in Mexico. Some of our competitors' products might not be. So in terms of how you interpret all this, we're trying to understand what the bill's going to be and how we're going to deal with it. But we don't have any imminent plans to raise prices as a result. We want to understand what the impact is and see how the market materializes going forward.
You know, a lot of other automakers tell me it's day by day, week by week, even hour by hour based on how things are changing. Yeah. And you're talking about how prices sort of staying the same for now. But one way that you can sort of control costs, and we've talked about this, is building in America. And that's what you're doing with some of these vehicles, right? And
we absolutely do. We've had for well over a decade a factory in West Point, Georgia, where we build the Telluride, we build the Sorento, we build the Sportage there, and we just started building the EV9 and the EV6 in the same factory. So we did a couple of things. We proved you can build internal combustion cars and EVs in the same factory. That's huge. As well, we just opened the Meta plant outside of Savannah, Georgia, on the other side of the state. And that has over a 500,000 capacity. So as you grow, you want to shorten your supply lines. There's a battery factory complex there and the vehicle assembly plant. So we'll be able to build more components here and more cars here. And this is all before this tariff talk.
Right. It was the investment's already happening. This takes years
ago.
Billions of dollars. So
yeah.
The car right behind us is the EV4, the new EV that Kia debuted here in New York. Is this, first of all, talking about the car, but also, is this one of those cars that will be built in America?
I'm not sure yet. We haven't announced what we'll be building at that factory, but we're building 2 other EVs here, as I said. And this is an entry EV sedan meant to come in under the EV6 price-wise.
You know, we've been seeing these EV sales for Kia in America just really taking off. What do you think why is the resonance happening? Is it because of price competitiveness?
It's the products, which includes the price-value relationship. Part of our DNA is value. I say value with a small v, meaning it's got all the technology and the features people want. It's just not cheap or a low price. We've got good products, and there's organic demand for EVs now. We just had a record first quarter for EVs, so we're growing. We're adding to the lineup, as you can see. We're going to continue to grow. We're going to make the cars here in the U.S. and make them more accessible. So we're very excited. And the Kia dealers are real winners because they now have 2 lines, an internal combustion line and they have an EV line in sister segments, right? You have Telluride, you have EV9.
And then also you have this other ICE or gas-powered car right there. Is it? I guess my question is, with cars like the gas-powered cars, do they go for a more price-conscious consumer, at least when it comes to Kia? I
think it's a powertrain choice at this point. People are always price-sensitive, but they have a preference for the powertrain. And there are people that prefer EVs. We're getting, for EV9, for instance, huge conquest car for us. We're getting people trading in Mercedes and BMWs on that car. Who would have thought? For a Kia. So the brand has a different level of acceptance. So even with the broadening go back to EVs, the broadening EV portfolio, are you seeing Tesla trade-ins? Are we seeing people like that? Yeah, especially lately because of some of that other stuff going on out there. But that says something in that our brand is credible with those customers in that space, and that's a wonderful situation. Right, building that credibility in the EV space, especially when you can do stuff like the Tesla Supercharger network, right? You guys have access to that. Right, and the EV6 and the EV9 that we just started building in West Point, Georgia, all have the NACS adapter standard. Or the NACS charge port standard. So that's a win-win, and pretty soon we're going to open the network up to all the Kia EV customers, those that have the CCS plug, You just use a converter, like
Right.
when you travel around Europe.
Right, so native NACS supercharging capability. Last question, Steve. I know you've been in this industry for quite a while now. You've seen it all. Kind of put us in context as to what's going on here. Is this another, ebb and flow of the business where we're going to have a trade war? We're not. What's going on? Is this just how it is with autos?
One of the things that I love about this business, and one of the things that's kept me in it for 45 years, has been the dynamic environment. And people in this business, whether on the manufacturing side or the dealers, are the most creative, resourceful people there are. So what's going on now? It's just more of the same. It's a different day of chaos, and we'll figure it out.
Right, and try to keep that growth going, right?
Right.
Well, retail sales came in stronger than expected in March as consumers seem to be rushing to get ahead of President Trump's tariffs. While spending is up, consumer sentiment has fallen significantly as Americans express concern for rising prices and economic uncertainty amid trading policies and changing trade policies. Joining me now in the state of consumer, we've got Stu Leonard Jr. He's the CEO and president of Stu Leonard's Grocery Stores. Stu, good to see you once again. What are you hearing from your customers who make their way into your stores, through your aisles, and hopefully to the cash register? I don't know if they're smiling, frowning. What's going on?
Hey, first of all, Brad, you got a lot of energy there. I'm just watching you bounce around that screen right now. I'm going to be a little more.
We're keeping it lively here, Stu. Keeping it lively.
Hey, but anyway, we have a family business here in New York, New Jersey, and Connecticut with 8 stores. And we have hundreds of thousands of customers a week come through Stu Leonard's. And so we got a pretty good feeling of the pulse right now. And I would just say we're getting ready for Easter and the store's busy. Our customer count feels up. The mood of the customers feels pretty good. I don't hear about this panic buying like I did during COVID. Our toilet paper is still full shelves there. So, but we're mainly perishable here at Stu's. So some of the items that could be affected by the tariffs today are part of the NAFTA agreement. So there's been zero increases in any of our suppliers, importers with pricing.
That's good to hear. And I wonder, as you're kind of breaking out what you're kind of feeling in the customers and what you're hearing from customers versus and stacking that up against what you're seeing in the data that's coming through on a per ticket basis, what is that average ticket looking like if you're kind of thinking about some of the comparisons that you would normally run?
Hey, you know what, right now, Brad, sales feel brisk right now. We're coming into Easter. Our catering orders are up. Our catering orders are up. And we feel good about the sentiment of customers. You know what everybody's really happy about? These guys right here. Eggs, okay? The egg prices are almost going down in half, so people are happy. I'll tell you what I'm worried about. How about this guy right here? Look at this. Okay, how about this guy? That's one of our salmon, right? So this is what we get from Canada every year. We get them every week. We do 500,000 pounds of salmon. So that price, I just talked to our fish buyer this morning, no increase in price. The thing that makes me a little worried, like right now, is bananas we get from Costa Rica and down south. Those, and same with these pineapples. These are all southern, so those have been bumped 10% on the tariffs, but our suppliers are holding. So sort of the mood right now, it's a lull before the storm. None of our suppliers have been raising their prices. A lot of them are just saying, let's hold on and see what's going to happen here over the next 2-3 weeks. Because in our business, we got to do volume. We got to do a lot of volume. When you raise prices, sales go down. So we are not raising prices right now. We're trying to hold and we're taking it day by day.
Stu, first and foremost, You always know that I love having you on the show because I never know what you're about to pick up. I did not have you picking up a whole salmon on my bingo card here, so thank you for surprising to the upside as always here. You also picked up a carton of eggs, and wholesale egg prices have dropped significantly in recent weeks according to the USDA. Are you seeing this fall in wholesale trickle down to consumer prices?
Well, you know what a lot of this has to do with energy. We're still spending a lot of money. You know, our kilowatt hours, even in our company, have almost doubled this year now. And so energy is a big thing. Transportation costs to get, bananas and pineapples. And, like another thing that worries me, all the lamb that's coming in from New Zealand right now. We have our own little, quote, tariff negotiation going on with our supplier. But here's the thing. It's Mary Beth. They have a beautiful little family farm in New Zealand. They raise the best, animals and sheep. Of course, New Zealand, there's more sheep than humans. But, and they're a beautiful little family business. I'm going to try this afternoon to work it out. She's going to want the 10%. I'm going to try to say, hey, Mary Beth, if you could hang on and do 50-50, I'll eat half of the tariff plus 5%, you eat half the tariff plus. I did that during COVID. She kept our shelves full. It's my turn to help this small family business out. I don't want them to be harmed too much because of the tariffs.
And Stu, in real time here, live on air, you're actually giving us a lot of the dialogue that many businesses are trying to work through right now with their partners. What is the pulse that you're hearing from other retail CEOs that you may be in conversations with them and the rest of us are just the consumers on the other side trying to figure out what our cart may look like?
Well, Brad, here's the thing. We got to work differently. Like, I'll give you a good example. Here's tequila right here, okay? Now, this is only made in Mexico. If this goes up in price, okay, and it's not right, or it is, that's going to be tariffed right now. Where are you going to buy tequila? After that, there's nobody else in the world produces it. So that makes you a little bit nervous with products like that. Although what our tequila importer, they brought plenty over stateside already. So they said, don't worry about anything for like the next month or two. We got plenty of product. The other thing, like you have things like, here's a beautiful French champagne, that comes in. But here's one, the same family out in California, Domaine Carneros, will make, it's the same family, but it's not called a champagne, it's called a sparkling wine. It's about half the price. Our customer's going to switch from a European wine or spirit. And are they going to start buying U.S. products instead?
Yeah.
Because of the tariffs. So that's what we're waiting to see. I wonder what's going to happen on that one.
Yeah. Well, Stu, I've been having the champagne of waters on my side, which is essentially just sparkling and bubbling water. That's what we can do right now. Stu.
How about this? How about come on over, Brad? We'll have some champagne and brie cheese together. How's that?
Look, I'm on the next train up there. Stu, thanks so much for the time, as always.
All right. Hey, happy Passover, happy Easter to everybody. Thank you for having me on today.
Same to you.
Susan, it's great to see you. Thank you so much for sitting down with me.
Absolutely. I'm delighted to be here this morning.
It's great to have you in Washington, too.
Yeah, I'd love to come visit Washington. Absolutely.
The president has paused steep reciprocal tariffs for 90 days, but he has retained the universal 10% tariff. At the same time, he ratcheted up tariffs on China to 145%. This morning, China is hitting back. What concerns you most about this current environment as tariffs stand right now, and as well as the impact on the economy?
Yeah, well, the higher the increase in tariffs and the more broad-based, of course, the larger the impact would be on our economy, on inflation, on growth. But as I think about things, my starting point really is that we came into the first quarter of this year with economic conditions that were quite solid overall, in terms of labor markets, in terms of inflation that was slowly, perhaps unevenly, moving back down. And so in that context, the tariff increases that have been announced and the uncertainty in terms of tariff, but also other policies, certainly does influence the outlook and also clouds it. And I think it's important to recognize that up front. So, my outlook would be for higher tariffs throughout, higher inflation, throughout this year with slower growth. And, the uncertainty, again, does cloud the outlook, and there are a number of other things to watch, from the financial market volatility, while markets continue to function well, to possible impacts on inflation expectations, which could also be a concern. So those are some of the things that I'm quite focused on as I look forward for the U.S. economy.
Do you believe we are in a full-blown trade war with China right now? And what are the implications there, given how high tariffs are on the U.S. and now from China's side as well? Do you see the U.S. economy decoupling from China? And what are the implications in terms of supply chains, product availability, and pricing in this country?
Yeah, so there are a lot of pieces to that. Certainly the tariffs that have been announced on our imports from China, and the announcements that China made are extremely significant, and that is concerning in terms of potential impacts. The integration of U.S. supply chains and production processes has evolved over many, many years, and China has been a really integral part of that. And so, looking forward, the implications in terms of costs and efficiencies are, significant. And when I talk to firms in the First District, they're obviously very focused on that. Many firms, particularly in apparel, in some types of electronics, had shifted some processes away from China, for example, to other countries in Asia relative to where they were 6 to 8 years ago. At the same time, significant investments like that are difficult to make in periods of extreme uncertainty, especially if, as a firm, you have recently made major adjustments. So there are a variety of things to recognize looking forward, and what I hear is really a pervasive wait-and-see approach as firms consider how to react to an environment that is highly uncertain, and with the tariffs quite elevated. 10% overall is very high. That is a large increase. And then, of course, the ones on China are much more substantial.
You mentioned that you expect slower growth this year. The Fed has penciled in 1.7% for GDP. But given the tit for tat that we're seeing now, specifically with China, are the odds growing for a recession? Are you growing more concerned that we could see a contraction in growth later this year?
Well, as I mentioned at the outset, the higher the tariffs are, the more the potential slowdown in growth, as well as elevation in inflation that one would expect. Certainly there are more adverse scenarios that I wouldn't rule out, but my own kind of modal scenario is one of slower growth, not a significant downturn, but there are a number of factors to watch in that context more broadly. In particular, the kind of wait-and-see approach that I mentioned. I think the financial market movements are something to stay focused on as well. And so my current outlook, again, is not the more adverse one, but I wouldn't rule it out.
In terms of the outlook for inflation, we stand at 2.8% right now on inflation. And you mentioned in your speech last night that if we had an effective tariff rate of just over 10%, then we could see inflation well above 3% this year. However, given that the tariff on China is 145%, JP Morgan's estimating that the effective rate could be as high as north of 25%, so more than double. So could we be looking at inflation of over 5% this year, or as high as what we saw during the pandemic?
Well, so there are a number of factors of that. I mean, as I mentioned, the higher they are, the bigger the impact would be, certainly. Boston Fed staff is assessing and estimating what the ranges would be. And in that context, it's really important to take into account the fact that tariffs are applied not just to final goods that are imported in, but also to imported intermediates, which are about 44% or so of those imports. Are much more broad-based than many people realize. And so the breadth of sectors that would be impacted is quite large. And so the estimates that I mentioned when I was at Georgetown yesterday do take all of those factors into account. How long they would take to impact inflation is hard to tell because there are a number of factors, right? Even if the tariff amount, the level of tariffs don't keep moving, how long it takes for firms to adjust to pass through. What I hear when I talk to firms, what we've heard in surveys that we do, is that that's likely to take a year or more, perhaps as long as 2 years. And so the persistence and how much of the increase we would see in 2025 versus perhaps longer than that is a little hard to assess in that standpoint. But I would expect inflation rates well over 3% for 2025 in the current context.
To your point then, you and your colleagues have stressed keeping long-term inflation expectations in check. And some of your colleagues have said that that raises the bar on rate cuts for later this year. Do you share that assessment? Does that put off the notion of rate cuts?
I do think it's a really important consideration. One of the very important assets that the Federal Reserve has is its credibility, and that is manifested in anchored longer-term inflation expectations. One of the key reasons that the disinflation was not associated with larger downturns that we've seen so far was associated with that anchoring. And so it's something I watch very closely going forward. Many indicators of longer-term inflation expectations are still in the range that we would hope to see, but some of them have been more elevated recently. And so that very much would factor into my own view and how much confidence I would have in inflation moving down over the longer term. That's what I would need to be looking at to consider additional normalization of policy rates.
So then do you see a scenario where you end up holding rates steady for the entire year?
So I think at this point, my expectation is that we are likely to have to hold for longer than I had before. It may still be appropriate to begin normalizing towards the end of the year, but I would need to see that confidence, and anchored inflation expectations at the longer term would be a key part of that determination on my part.
Lawmakers on Capitol Hill are looking to limit President Trump's power to impose tariffs. A newly proposed bipartisan bill known as the Trade Review Act of 2025 would require the president to notify Congress of new tariffs within 48 hours, would give Congress 60 days to approve those tariffs and the ability to end them at any time. Here with more, we've got Democratic Senator from Massachusetts, Elizabeth Warren. Senator Warren, thank you for making the time. You are calling on Congress to stop these tariffs, but the president has already come out planning to veto any congressional action, and you still don't have full bipartisan support. Is there a veto-proof measure that you could realistically accomplish on tariffs?
Well, so let's remember, I very much appreciate that right now there are Republicans as well as Democrats who are saying that what Donald Trump is doing with tariffs is a disaster, not good for our economy, not good for American families. So the question is, what can we do together? You know, there's already legislative authority for Congress to roll back the emergency declaration that Donald Trump has made. And if we use that legislative authority, then the tariffs are no longer in place. We can do that. We can do it quickly. And I think it's what we ought to do right now.
What are you hearing from your Republican counterparts in Congress about how they are hearing from their own constituents on the potential impact of tariffs and how that impacts their likelihood to join you on this?
You know, I'm not hearing from anyone in Congress, Republican or Democrat, who are hearing from people back home that Donald Trump's tariff announcements have been good for them. Let's face it, this kind of across-the-board tariffs, not thought through, not to protect a particular industry or to onshore a particular supply chain, not brought in over time, but instead just this massive shift. This is something that the chairman of the Federal Reserve has already said is going to drive up costs for families through inflation and drive up unemployment simultaneously. And families are really, really worried about that. They're also worried because they're already seeing prices go up. There are already those companies that are announcing, oh, tariffs are coming, so we're raising our prices right now. Let's face it, this is just a form of price gouging. And what the tariffs permit companies to do is when everyone's talking about prices going up, they get to raise their prices not just to pass along costs, but they get to raise their prices just to boost profits because they think they can get away with it. That's going to be really tough on American consumers, and they're pretty upset about it, and they're letting their representatives and their senators know about that.
So, Senator Warren, help me understand the extent to which you feel that you will be able to successfully bring back congressional authority over tariffs. Obviously, the president had utilized IEEPA, talking about how these tariffs required some sort of emergency economic power. Do you think one of your tools that may be more effective is Congress proving that there was, in fact, no emergency here?
In fact, that's what IEEPA requires, right? It permits Congress, it gives Congress already a role. You're right to focus on that statute. And it gives us the power just to come in and vote and say there is no emergency. And remember, last Wednesday, that's when we saw the first crack in the Trump Republican senators' wall. And that was that Democrats introduced a bill. Remember, at that point, we only had the tariffs against Canada and Mexico. Introduced the bill saying we are not in an emergency with Canada. And that would have rolled back those tariffs. And not only did all the Democrats vote in favor of that, we had 4 Republicans cross the aisle so that a majority in the Senate have already voted to say no to the tariffs with Canada. Now, we need the House of Representatives to do the same, but the bill is there. It's now pending, this resolution. It's not even a bill, this resolution under existing statutory authority. So this is a moment when pressure from back home, from all those small businesses who are worried about what's going to happen to their own costs or whether or not consumers are going to be able to buy their products. Pressures from families saying they're worried about costs going up or about losing their jobs.
And so, Senator,
this is the moment we could see a change
given
among Republicans.
And given all those challenges that you lay out, one body that does have emergency power right now is the Federal Reserve. Do you think the Fed should come in with an intermediate cut?
Well, the problem the Fed's got is that it's being pulled in 2 directions at once. On the one hand, we're watching markets go down, but on the other, the Fed is saying they're very worried that inflation will go up and simultaneously that unemployment will go up. Remember, the Fed has very limited tools, and an interest rate reduction at this point may play in to the right place on jobs, but if it's pulling the other way on inflation, I think they've got a really hard path in front of them. And that's the problem you get into when it's chaos. And that's what it is that the President of the United States has created. You know, this is the dumbest trade war in history. And this is a potential recession created not because we had years of building up risk in the financial system as we did in 2008, or because there's been a war. Instead, this is one person creating enough chaos that it may bring down not just the American economy, but the worldwide economy.
And Senator, are you concerned about a bank run given all that chaos?
Well, again, it's how far out this is going to echo. And yes, as people start to have to ratchet back on their investments, as they have to start selling off assets to meet margin calls, then you start to worry. Are the banks in a steady place? And this is where the Secretary of Treasury needs to act more aggressively. You know, yesterday he was talking about how all these people that Donald Trump and Elon Musk have illegally fired, oh, they'll go work in the factories. Well, those factories aren't built. In the real world, that simply is not possible right now. Instead of engaging in that kind of fantasy talk, he should be convening the FSOC, the the oversight that we have, the oversight committee, and it should be right now pulling all of the economic leaders throughout government together and working on a plan to make sure that our entire financial system is secure. But right now, the Secretary of Treasury just seems to be off on a sales pitch rather than actually doing his job of convening FSOC and making sure that our entire economy at least holds off as much of the damage as possible.
And Treasury Secretary Bessent is meeting with Jamieson Greer with USTR. They're going to be speaking with Japan about a potential deal. If deals are made, markets are going to potentially rally off of that. Is deal making sufficient in your view on tariff policy?
Look, much of the damage is already underway. Because if Donald Trump says he goes for a deal today, is anyone confident he'll be on that same deal tomorrow or the next day or the next day? Who makes an investment that will take 20 years to amortize? Who builds a factory based on having a pretty clear understanding of what the international trade picture looks like at a time when Donald Trump is saying over here, over there? The tariffs will be this big, no, this big, this big, this big. Uncertainty does not help create investment here in the United States or anywhere else around the world. And that's the real problem. Donald Trump is out there just shooting wildly, and that's bad for American families, bad for the American economy.
And Senator, I want to end with your message to constituents who are concerned about their 401ks, who are even concerned about missed Social Security payments. What would you tell them?
I would tell them to remember that right now, Congress has power, and that Congress can roll these tariffs back and steady this economy out. But it's going to take Republican support to make that happen. The laws are in place. We just need to vote to make that happen. So let your senators, let your representatives hear from you. If you want those tariffs leveled out, you want to have something steady, make those phone calls, send those emails, send those texts. Now is the time.
Senator Warren, thank you so much for making the time for Yahoo Finance. Really appreciate it.
Thank you.